All right, guys, welcome to today's awesome and wonderful meeting, right? So, today we'll be talking about a whole lot of things. Still on candlesticks. On candlesticks, we are seeing the epistles of the candlesticks, right? So, candlestick is the hallmark of price action. Without it, it's going to be difficult for one to trade, not only to trade, but to trade profitably, right? So today we're going to be talking about a special and also a unique candlestick formation. You see how important the other candlesticks are, right? So that's the how important this particular candlestick I'm about to talk about today is. So you can't trade profitably without the use of candlestick because that is the hallmark of price action. You can't trade profitably without the use of the candlestick. Adequate understanding of the candlestick, it what gives you an edge in this forex market because it's going to help you to be able to read the chart, to be able to read this chart, whether you are going for a buy or for a sell. Adequate understanding of this candlestick will help you. It's just like a shortcut in the forex market. So before we go ahead, remember, if it's your first time joining this channel, do well to hit the subscribe button. Do well to subscribe. And the most important thing is to share to your friends for them to join and get this good news, for them to be able to get whatever we are doing here and become profitable in the forex market. Right, so what do we have today? It's a candlestick pattern known as the tweezer top and the tweezer bottom pattern. I come again, the tweezer top and the tweezer bottom pattern. So what is this pattern? Tweezer top pattern, this reversal pattern found at the resistance zone and consisting of two candlesticks. It's a reversal pattern found at the resistance zone and is consisting of two candlestick pattern, right? So this is not just a pattern and it's not only traded for reversal, it can also be traded for continuation. But what is this pattern? What is this candlestick pattern? How is it? Before you go ahead to buy or sell, how is it in the market? What is it all about before you go for your buy or sell in the forex market? Now, this is how it looks like, the tweezer top candlestick pattern. This is how it looks like. You can see how it looks like. Now, the market is made up of two candlesticks, especially found at the resistance zone. You will see a market buying, 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 buying. That's going high, making higher highs, higher highs. Before it goes for a reversal, it closes above. This is a bullish close here. Then same high without even giving a gap, just like the Harami pattern we talked about and the other pattern. This one, there is no gap to any place. At the same price, the bullish candlestick close. That's the same price the bearish candlestick opens. You can see opens, then closing below. It doesn't matter whether it engulfs the bullish one or it closes close to the close to the opening of the bullish candlestick. It doesn't matter. What matters is the highs. It should be the same highs in the market, right? I'm going to spot it on the chart and show us how it works before the end of this meeting, right? But let's quickly look at the characteristics. It shows reversal in the market. It shows reversal in the market, right? But I also said it doesn't only show reversal, it also shows continuation. But the most important thing is that it shows reversal in the market. It can also mean a short bearish trend in the forex market. It can also mean a short bearish trend in the forex market, right? Unlike every other reversal pattern, when it reverses, it takes a longer time before that trend that it reverses to changes direction. But for the tweezer top, when it reverses, it can only go for a short time, sometimes for a short time, sometimes it can also go for a longer time, right? But sometimes it's for the short time, right? So it can also show a short bearish trend in the forex market. This pattern is made up of two candlestick pattern and formation. It's made up of two candlesticks. That's just what it simply means. It's made up of two candlesticks. It's made up of two candlesticks. That's what it simply means. It's made up of two candlesticks. Just like this, you can see two candlesticks. The first, the bullish candlestick, then the second, the bearish candlestick. The first, the bullish candlestick, the second, and the bearish one too. So that is the most important thing in the forex market. So these same highs, they must have the same highs for the tweezer top. They must have the same highs in the forex market. So this pattern is, we just say that the first bullish candlestick in favor of the trend and the bearish candlestick opening same price as the bullish but closing below. So what does this mean? What does this mean? Now when you get to the chart here, you will find out that after the close of this bullish candlestick, the next one must open at the same price, as the bullish one before closing below. So these are the characteristics. If it's there, it's there, and if it's not there, it's not there, right? So take a good look at this. It must be the same price. You can see the same highs. I'm going to show us on the chart. By the time we get there, it must be the same price that the market is closed. After the close of the bullish, the bearish must open at the same price, closing either in between 50% or 90%. You see the market heading to the downside, right? So let's take a good look at the direct opposite, which is the tweezer bottom. Is the direct opposite of the tweezer top. So look at a good example that we try to get. You find them here. Now these are the different flavors. They come in these different flavors regardless of the color. So you find this at the bottom, at the support zone. So whenever it's spotted, it's trying to tell us that the market will go for a high, but there must be an open. You can see here at the same price that the bearish one closed. You can see the same thing here at the same price that the bearish one closed. Whether it's still a doji, but must not exceed the same price that the bearish one opened at an exhaustion of a downtrending market. You can still see this one right here, right? So for the bearish or the tweezer bottom, it must be at a support and exhaustion of a downtrend. Then for the tweezer top, an exhaustion of an uptrending market. But there's this secret here. You can still trade a tweezer top in a downtrending market only when the market makes a deep retracement, giving you a confirmation, a tweezer top confirmation after the deep retracement at the resistance zone. You can sell it not only at the exhaustion of an uptrend. No, in a downtrend, when the market is done making a retracement, that's making a lower high to the upside, giving you a tweezer top, you can sell it. That's the secret there. Then for the tweezer bottom, you can also trade it in an uptrending market, but you have to allow the market to make the retracement, finish up the retracement, giving you a tweezer bottom pattern. You can go in for your buy. That's the secret. So for the tweezer bottom, let's quickly check the characteristics. Must best traded when found at the support zone. Best traded when found at the support zone, right? So either in an uptrend, allow it to make a deep retracement, giving you confirmation, you can buy it. Also a reversal pattern in the forex market. It's also a reversal pattern that is at the support zone for a buy. You can now, that's an exhaustion of a downtrend, you can go in for a buy. The pattern is made up of two candlesticks, where the first candlestick is a bearish candlestick. You can see the first candlestick must be a bearish candlestick, and the second bullish candlestick opened at the close of the previous. So what this is trying to tell us is this: after the close of this bearish candlestick, you must wait for the next candlestick to open and close bullish, when it opens closing bullish, look at where it's closing here. It must close bullish, but the same price that the previous candlestick close, that's where it's going to open. It can also mean a short bullish buy. That means the trend might not possibly last. So before we get to the chart to spot it, this here a good example how it's found on the chart. The same price. You can see the market selling, but when it got to this place, at the close of this candlestick, a new candlestick opened, trying to buy, but it opened at the same price. Whether it can go up the previous one, it doesn't matter. Whether it closes below, at the middle, it doesn't matter, but must be above. So let's quickly get to the chart to spot what we are trying to. This is a killer strategy. Before even opening the chart, this is a good example of tweezer top here. Forget about the week, provided the close are the same. This is the close of the bullish candlestick. This is the opening of the bearish candlestick. The same tweezer top, the same tweezer top, the same. It must be the same for tweezer top. Now, if you also find your tweezer button, just the one like the one I shared with you, it must be the same. So all these things work. All these things work. Remember the dark cloud we talked about? This is a good dark cloud here. This is a good dark cloud. But today we are just talking about a tweezer top. So all these things work only if you use them, not only using them, but using them very well, using them judiciously, and you see yourself working and making a whole lot of profit. All the candlestick pattern we'll be sharing and sharing and sharing is for our benefit and for our good, if only we use them very well. So as a way of recap, we started with the tweezer top pattern. With the tweezer top pattern, that was what we started with, the tweezer top pattern, and we said a lot of things about the tweezer top pattern. We said the tweezer top pattern is a reversal pattern found at the resistance zone consisting of two candlesticks, right? So this is a good example of it. The same high, that's the most important thing, and is found usually found at the resistance zone. Either you trade it at an exhaustion of an uptrend, or you wait for in a downtrend, wait for the market to make a deep retracement to the upside at an exhaustion, giving you this tweezer top. You go in for yourself. You can see the characteristics which was listed. It shows reversal in the forex market. It can also mean a short bearish trend in the forex market. That's one of the flaws of this tweezer top, is that the trend most times does not last long. It can also mean this pattern is made up of two candlestick, right? So you can see it is made up of two candlesticks. The first, the bullish, and the second, the bearish. The first bullish candlestick in favor of the trend, and the bearish candlestick opening in the same price. What this is trying to let us know is that the first, the bullish, then the second candlestick must open at the same price that the bullish candlestick close. That is simply what it means, right? So this is a good example of what we are trying to share with us. When spotted at the resistance zone or in a downtrend after a deep retracement, you can see a good fall, a good sell in the market. So tweezer bottom is the direct opposite of the tweezer top, right? Tweezer bottom is direct opposite, spotted at the support zone. As seen here, the first candlestick must be a bearish candlestick. The first candlestick must be, while the second must be a bullish candlestick. While the second must be a bullish candlestick, even though it's not a bullish candlestick, but the opening must be at the same price that the previous candlestick closed, then closing above. Either you trade it in a support zone, an exhaustion of a downtrend, or you wait for the market in an uptrend to make a deep retracement, giving you a bullish candlestick confirmation. Then you can go for a buy. You can see the characteristics which we listed, and this is a good example of this. I enjoy this. This is a very wonderful and a very good strategy for we to trade with. A very wonderful and a very good strategy for we to trade with. Go apply it to your trade, make some bucks, make a whole lot of money, and come back to gain more and more and more to make much more money, right? So thank you very much for joining us today. All right, bye now.